Alright, what's going on, guys? Tremaine here, the most disciplined day trader on YouTube. Going long here, NASDAQ. Looking for sell side and midnight opening price as a draw. Treating this fair value gap here as an inversion fair value gap. Once we get back beneath it, I want to see us use it as a premium array. Discord members will have a more in-depth trade breakdown later this evening. I'll send that video out. Looking to pyramid and build this position up a little bit. See if I can finish my week today. We have relative equal lows. That red line is sell side, that low formed around midnight. And I want to see if I can add, if it doesn't just run away to my targets. Looking to see if I can add one more contract to this at a logical level. Don't want to risk any more than $1,300. So far this is looking favorable. S&P and Dow are looking weak as well. Let me see, dollar index looks good. Euro dollar looks heavy, so everything's pretty much in sync. I'm looking at this down close candle, treat that as potential mitigation. I want to see if I can get another contract short inside of that, and I'll trail my stop loss above mean threshold of this up close candle. If we could trade back into the low end of it. Not expecting the cleanest price action on FOMC day. We do have FOMC later this afternoon at 2 o'clock. So generally, the rule of thumb is the morning session can be a little bit more difficult. One second, I'm going to come back to that thought. But I'm trying to see if I can get a short inside this down close candle. If I can add another one. If it just runs away, then that's fine. Just give me one little touch in there. There we go. I'll take that as a pyramid. And I'll trail my stop loss down after I adjust this. Out there again, I don't want to risk more than $1,300, so I like how this is looking. Risk is good. We have a lot of sell side, and my cat is scratching her little cat tree. I got a new mic. I'm not sure if it's picking that audio up, but I'm looking to close 2 of my 3 contracts at the midnight opening price, and I'll leave that last contract on for the relative equal lows, sitting at around 26,220. Now for my stop to get moved at break even, if we eat through the midpoint of this wick at 1013 and get through it on a closing basis, then my risk will come off entirely. I'm just waiting for NASDAQ to continue to show me signs of heaviness, and for me what that looks like is, can we get through midpoint of this wick on a closing basis? Because if I'm bullish, I would want this discount wick because wicks are gaps. If I'm bullish, I would want this to offer support, but clearly I'm not bullish, I'm bearish. So I'm looking at midpoint, and I want to see, can we dig through that? And if we can close beneath it, then my stop will get trailed right above the swing high. So I'll go ahead and mark that. Midpoint comes in at 272.25. already forgot what it was. What was it? 0.25? 272.25, yeah. And I'm going to outline it in red because should we get beneath it, I would expect it to be used as a premium array, meaning I would want it to be used as resistance. So a closure beneath that price level there is my trigger to completely remove my risk altogether, because I would expect speed towards the sell side and towards the lows here once we get through that price level there. If you go to your 4-minute chart, we're trading inside of a CIBI, and I'm referencing the 4-minute chart because on the 5-minute there's no fair value gap. It's just this range of price action is a single pass up and then a single pass down. It's just 2 candles, no fair value gap. So that's when I do my top down 5-minute, 4-minute, 3-minute, 2-minute, 1-minute to find an inefficiency. So if you go to your 4-minute chart, we're trading inside of a bearish CIBI. So I don't want to flip screens and do all that, because I post this footage to Instagram and TikTok and all that stuff. Oh my gosh, she's all over the place. And it makes it easier for me to edit by not touching the screen too much. So, but if you look at your 4-minute chart, that's what we're trading inside of. Go ahead and extend this forward. And again, I'm just watching the lower half of that inversion fair value gap. Not expecting that high around 9, or when is this? Not expecting that 10 a.m. high to be taken. We've already cleared out buy side above this high, relative equal highs, and we've cleared out buy side here. So we've engaged those buy stops. Smart money can sell those buy stops. People are buying. Okay, they want to go break out long above this high. So if they want to buy up here, then that's a counterparty to your short. They buy, we're selling what they're buying. That's the logic. So in other words, this high should be protected if we're bearish, because we've already engaged the buy stops here. And we have sell side, sell side, sell side. Hopefully I'm not in this trade for too long. I don't want to have to upload a 30-minute, 45-minute video to YouTube. And I really don't feel like speeding this up and having to do a voiceover. But I'm anticipating, should we get through midpoint of that wick, that outline here, once we get through that, then I would expect NASDAQ to kind of just free fall and have no struggle getting to the sell side in the midnight opening price. Alright, what's going on, guys? I'm back. At first, I just wasn't going to do live commentary for this because I know how long I was going to be sitting here yapping until the trade got moving. But now that we're at consequent encroachment of that wick, it's time to get back in business. So I've added one more contract as we're crossing the opening price of this up close candle. Should we trade into that, I'll expect that to be treated as a bearish order block. And now all I'm waiting for to completely remove my risk is, can we get through midpoint of this wick? So you can see we've tapped it to the tick here, and I actually like where we're trading in the suspension block. I may add one more inside of this. This candlestick at 1043 is your suspension block. And I made pyramid one more. Should we get back to the low? Here, let me just do this. Trying to add the text, but I don't want to miss my pyramid entry. There we go. Adding one more inside of the newly introduced ICT suspension block. Trailing stop loss down. Notice how I'm not incurring too much risk. And I'll take off another one at the high of that daily premium wick from yesterday. I'll take another contract off there. So notice how I opened that position up initially with 2 contracts, and now I'm in short 5 contracts, but the risk is still less than 1%. That's how I pyramid manage my stop loss. When I take a loss first in a session, or maybe a couple of losses, this is how I'm able to recoup those losses without over leveraging, just pyramiding. And again, once we get through consequent encroachment of this wick on a closing basis, that's when I would expect NASDAQ to get in like a free fall and just melt lower with ease, with speed that's preferred. Typical sloppy FOMC day delivery. All of this is expected. When it came back to the high end of that inversion fair value gap, if it would have stopped me out, that would have been fine. The stop loss was trailed down. The risk was very minimal and wouldn't have met much. But this is why I say on days like this, you cannot be too aggressive with your stop loss management, because these days are more likely to deep retrace, wick around. The trade idea can still be good. Okay, it can still head to whatever draw liquidity you think it's reaching for, but the delivery will be a little bit more, it's like pulling teeth. So that's why I've been pyramiding, and my stop loss is still not at break even. Can't be too aggressive. Now, if that's uncomfortable, again, just don't trade on days like this. especially if you're not, like I said, comfortable leaving an open stop for a prolonged period of time. Just comes with experience and understanding what you're looking for. So we're beneath the midpoint of that wick, and now I want to see, can NASDAQ just get into a free fall? That's like the last line of defense for higher prices. And look at that, beautiful. Beautiful, beautiful. So now go ahead and reduce this risk. Stop is at break even, plus $100. Should have come from my stop. Gotta get paid for my time, right? So I have the bulk of my position, 3 contracts coming off at the midnight open. Look at that. That's gorgeous. And then I have 1 contract coming off at the high of yesterday's wick. And then I have, oh yeah. Thank you very much. I will take that. Getting paid for our time this morning. So realized P&L, you can see in the bottom right, locked in $3,000 on the day. Straight to the midnight open. And I'll go ahead and, in case it spikes down there really fast, I'll change this to, what is this? I don't know what's going on with that, but I don't want to press anything, so I'm just going to leave it there. I don't want to close my position by accident. Beautiful, beautiful exit. Beautiful. Now if it comes back for my break even, that's fine. I booked 80% of my partial. It's a great day. Beautiful delivery. Actually, the delivery wasn't nice. Sat in consolidation for nearly an hour, but was rewarded for not trailing your stop, not panicking and doing too much. If it's really good, we will stay beneath consequent encroachment of that wick. Again, the reason why I outlined it in red to begin with was because if we get beneath it, trade back up to it, I would want it to be used as resistance. So we're trading right at that level now. It's not required. We did trade about 1 tick underneath that low, and we've reached the midnight open, and the bulk of my position is turned off, or the bulk of my position is peeled off. If we still wanted sell side and all the objectives at 26,230 or so, I would like it to use consequent encroachment of that wick to take us there. Never had more than $1,200 in open risk. So with the P&L that's realized with only 3 contracts, that's already roughly a 3-to-1 risk to reward, and I still have 2 more contracts on the table. I'm considering, if it gives me the opportunity, if we trade down to that opening price, because we're pushing at 11 o'clock, and 11 o'clock usually brings a retracement. So I've been short all morning, and 11 o'clock usually it runs against whatever happened in the morning. So overall, we were bearish on the morning. It's sloppy, it's not a lot of range, but the movement and direction was lower for majority of the morning session. So now as we're approaching 11, that retracement and reversal is a little bit more likely. So that opening price of this down close candle at 1050, I'm looking to take a pyramid, or not a pyramid, I'm looking to take a partial there, if it lets me. If not, then I've banked enough, and then I'll just leave my last contract on for the relative equal lows, because we're in that time of day now where we may want to run on some buy side. So this right here, if it gives it to me, if not, if it goes for my stop, that's okay. But if it gives me that opening price, I'll take another one off. That price level comes in at 261, so 261.25. See if I can get that, and then I'll hold out my last contract for the sell side, and then we'll call it a day. And the reason why I'm getting out at that opening price, because if we're bullish and we're in the London close macro 1050 to 1110, if it was time to rally higher and run on some buy side, I would expect sensitivity at the opening price of that down close candle. So in case we want to trade to it and have a reaction higher, I want to go ahead and bank something off. Now, if we do what I prefer to do, which is eat through that down close candle and aim for sell side, then I still have a partial waiting for me down there as well. There we go. There is the partial. Move that stop loss down. And then if that order block wants to send price higher, doesn't make me any different. If we eat through it, all the better. I have a partial waiting. Live account, not market replay. Okay, real broker, TradeStation. I'm blurring out my account number and account balance and all that because that's really nobody's business, but you can see enough here. And finally, there we go. That's all she wrote. $4,400 on the day. Brutal trade, long hold, sloppy delivery, but all of that was expected. Still expecting this sell side to be reached, and then the high of the daily premium wick, but it's 11 o'clock, so that normally brings a retracement or reversal. So I'm glad to fully be out finally. You can see the exits, all the entries. and then all of this fun stuff here. Connected green dot, market open. Okay, real money, real trades, real executions, one and done today. Love y'all, man. Hopefully you found this insightful. Discord members, I'll see you all in the live stream tomorrow morning at 9:15. All right, peace.